So let's go to a very small topic today, that is on final accounts. How do you prepare final accounts? You all know that final accounts is being prepared by using the trading, profit and loss account and the balance sheet. Trading and profit and loss account gives you the profit of the company or profit of the sole proprietor, and the balance sheet gives you the financial position of the company. So now let's take a look at a small problem that is given to you. That is the final accounts of ABC Garments. This is the trial balance of ABC Garments as on 31/3/2017. So this is the trial balance that is given to you. It has the opening stock, purchase, royalty, customs duty, debtors, bills receivable, bad debts, carriage inwards, telephone charges, printing and stationery, investments, land and building, income tax, cash, furniture, and giving you the total of the debits and of the credits. The credit side, we have the sales, creditors, bills payable, interest, the rent, capital. Okay, and then we have the adjustments that are given. The adjustments are, you have the closing stock which is valued 19,300, carriage on purchase, outstanding amount 450, rent received in advance 250, interest receivable rupees 150, depreciation 10% required on furniture, 5% on land and building, printing and stationery in stock, that is 150, and you're going to prepare the trading, profit and loss account and the balance sheet. So let us move. How are you going to treat each adjustment? The adjustment that is seen after the trial balance. So let us take the first one. The first one was the closing stock. So the closing stock, usually the adjustments are taken twice. It has a twofold effect. So the adjustment entry will be closing stock account debtor to trading account. So the first fold effect is you will see it on the trading account on the credit side, and the second fold effect you will see it on the asset side of the balance sheet. Again, the outstanding expenses. This is the journal entry, the adjustment entry for this. The concerned expense, account debtor to outstanding expenses. So what is the effect? It is added to the concerned expense and it is shown on the liability side of the balance sheet. Again, in rent received in advance. So whatever the concerned income, account debtor to income received in advance, it is deducted from the concerned income shown on the liability side of the balance sheet. This is a twofold effect for it. Now again, the interest accrued. You have interest accrued account debtor to interest added to the concerned income and shown on the asset side. And again, you have the depreciation account debtor to fixed assets. It is shown in the P&L account as an expense and it is deducted from that particular asset in the balance sheet. So these are the adjustments, and how are you going to put it into the accounts? Again, you have one more adjustment, that is closing of printing and stationery. Usually this is one, it comes only, now this closing of printing and stationery, the journal entry is stock account debtor to printing and stationery, and it is shown by deducting it from the printing and stationery and also on the asset side of the balance sheet. Why do you prepare this P&L account and trading account? You are preparing it to know the actual profit of the business. So that is the reason you are preparing the P&L account and the trading account. So now let us see how is it incorporated in the statement. Okay, so here we are having the trading and the P&L account. See, the opening stock is on the debit side, purchases again on the debit side, carriage inwards 1,500. Along with that, you had an outstanding amount to be added. When you add that amount, it comes to 1,950. Again, the royalty 7,500. All direct expenses will be taken in the trading account. All expenses pertaining to the factory will be taken to the trading account. So customs duty 12,000. And here on the credit side you have sales and you have the closing stock. When you close a trading account, you will be getting the balancing figure as either gross profit or gross loss. But in this case, we have got gross profit. So next is you bring down the gross profit to the next session. And this session is the P&L account session. Okay, here you will be bringing in all the indirect expenses. So, what is it here? We have bad debts, telephone charges, printing and stationery. The last adjustment, what I told you, is closing stock of printing and stationery. How are you going to treat it? You have to minus it from the printing and stationery and show it out in the outer column. Why do you minus it? Is because you want to know the exact profit of the firm. And only if you minus it, you will get the exact profit, because that stationery is in stock and it can be used for the following year. Again, depreciation on furniture, depreciation on land and building. And again, on the credit side, you have the interest which you have to get, interest receivable. Add it and put it in the outer column. Again, rent, you have 4,800, and this is which is received in advance. Minus it and put it in the outer column. That way you will be getting your net profit for the year. Again, what you do is you prepare the balance sheet. Balance sheet is a position statement as on a particular date. Okay, so now let's see the liability side. You have creditors, bills, payables, carriage. All the adjustments will come twice. Either once in the P&L, trading, and in the balance sheet. So see, carriage outstanding, it had come in the trading account, and here too it has come in the balance sheet, liability side. Again, rent received in advance is also seen in two places. Now, what do you do with the net profit? Net profit, you will add it onto the capital. Once you add it to the capital, the income tax has to be minus. Why? Because it is a personal expense of the proprietor. So you have to minus it and show it in the outer column. Again, you take the assets. All the assets are recorded on the asset side of the balance sheet. See, stock, you have debtors, bills receivable, printing and stationery in stock, which was in the adjustment 150, the investment amount, land and building, less depreciation, cash, furniture, less depreciation, interest receivable, and there you get your balance sheet tallied. This is how you do a simple final accounts problem. I hope it is clear. Thank you.